In this video, we delve into the concepts of up and down moves in trading, as well as break and hold levels. Let's get started. First, an up move. An up move consists of two or more consecutive green candles on a price chart. These candles indicate a rise in price over successive periods. Here is an example of an up move. A down move consists of two or more consecutive red candles, showing a decline in price over time. Here is an example of a down move. Understanding key levels. A break level is defined by the top of two or more red candles. This level represents a point of resistance that needs to be surpassed for an upward move to continue. This level needs to be broken for an upward move. A hold level is defined by the bottom of two or more green candles. This level acts as a support, and ideally the price should not fall below it. Understanding broken. A level is considered broken when the body of a green candle closes above the break level, or the body of a red candle closes below the hold level. This signifies a potential shift in market sentiment and can indicate potential trading opportunities. Understanding these concepts is crucial for making informed trading decisions when you receive new Zazook Juicy tips. By identifying up and down moves and recognizing when break and hold levels are broken, you can better anticipate market trends. Happy trading, everyone.